On the phone line is Peter Cardillo. Hi, Peter. Good evening. This is Ruchi Bhatia. So let me first begin by asking you as to how you're looking at the vaccine developments. And even though the markets, of course, are taking heart from the fact that countries like UK and US have started mass inoculations of the vaccine, one cannot ignore the fact that by the time at least 1/3 of the population does get vaccinated, that's still some time away. It is still going to take about another 3 to 4 odd months.
Exactly, you're right, and it might even take more than that. But you know, the news is euphoric at this time, and of course, as you know, the Pfizer drug is already being administered, and this morning we got word that the Moderna's vaccine drug passed the baby step to be approved. It was backed by the FDA staff, and so we're going to see more drugs being approved. And of course, as you said, it takes time. But the market is enthused about it, and it's enthused about it because it's being accompanied by the prospects of a stimulus bill. Yesterday, a bipartisan bill was unveiled, and we're seeing some progress move towards that. So there's a good chance that we might see the stimulus bill come into fruition by the end of this year. And that's another reason for the market to be optimistic.
Having said that, if you look at the market so far, we're of course been moving only one ways, and that has been upwards so far, even as we're coming out of and the economy is coming out of the aftermath of COVID-19. But where from here in terms of the market moves?
Well, look, I think we'll probably have the traditional rally in the first quarter of the new year, that means that, we probably could see a gain of anywhere from 7 to 8%. But then I think the market is headed for a pullback. And there are other factors for that. One, there are several factors for that. One, valuations by that time might be well stretched out. Second, we'll have a new presidency, and the pro-business administration that we had is going to be less of a factor in the market, in the sense that while the Biden administration will be a centralist government and will have some incentives for businesses, but the full force of a pro-business attitude is obviously going to diminish. And so the market is going to have to be faced with some serious problems down the road. And those serious problems are going to be huge deficits that are going to continue to pile up. And that means that at one point, we're going to see higher inflation. And then we're going to have to deal with the Fed. Now, the Fed has been very clear that they're going to stay dormant for quite some time, and that they will permit inflation to go above their targets. But if it gets too much out of hand, due to a very weak dollar, due to a rise in commodity prices in general, the Fed may have to rethink its policy. And so I say we're headed for some sort of a correction, but that's not going to happen until the middle of the second quarter.
Okay, we will see some correction, but definitely not now. It's going to wait till the second quarter. Peter, appreciate you taking your time out and speaking with us today at ET Now and helping us make sense of the developments as we're seeing on, with respect to the U.S. markets on Wall Street.